Good morning, everybody. Welcome to another day of Market Report brought to you by Mike Bjork, and happy Friday. Today is February 12th, and we'll jump right into it. We got a few economic news for this to go over today, and we'll start off with the retail sales for the month of January. So we had a 0.2% increase in the month of December. Forecast is supposed to be nil, and it went up by 0.2%, so good numbers right there. Retail sales, when you exclude, this is basically the core retail, when you exclude the big ticket items like autos, with a 0.1% increase in the month of December, and January was supposed to contract at a negative 0.1%, but instead it went up at 0.1%. So good overall retail sales numbers, which we like to see, especially in January, which typically slows down after Christmas, the holiday seasons there. Import price, not a big index here, but it gives us an idea as to our cost structure. You know, it looks like our imports are coming in less expensive because of the the strength of the dollar. So we had a negative 1.1%, and it continued out negative 1.1% in January as well. We got the consumer sentiment. This is kind of gives us an idea of how the consumers are feeling out there, and that did drop a little bit. So that, of course, we want to keep eye on. We went from 92 all the way down to 90.7. And last but not least, we got business inventories, and we went from a negative in January at negative 0.1%. Forecast was go up to 0.2, and it went up 0.1%. So that's a good sign where businesses are increasing their inventories, which could hopefully provide more jobs in the near future as well. Right now, the stock market's up after taking a pretty big beating this whole week. Stock market's rallying a little bit today, especially in the banking as well as the energy side stocks, primarily because oil went up a little bit today, and a lot of investors are realizing that banking's probably not as bad as what it might be. Just you got that kind of snowball effect where there's a little bit of concern and it started dropping and just kind of continued down. Comments by Fed Dudley. He's out of New York. He basically some of the things he basically said that the U.S. Economy is pretty strong, resilient enough where it can absorb a lot of the global stuff that's going on in the global economy. He also thought it's very premature to start talking about negative interest rates. Those are just a few of the items he kind of talked about earlier today. This isn't his comments didn't really drive the market or anything like that, but mostly the sentiment kind of changed a little bit today, and that's where the stock market's going up. So as a result, stock market going up, it pulled back on the bond market, and of course, the bond market's down about 25 basis points. Now, as you can see, we did have a huge drop yesterday. We were up like 50 basis points, and then we dropped about 50 basis points to the end. So we basically, by the time we were done yesterday, it was like negative 0.3% or negative 3 basis points. So we did have a pricing for the worst yesterday, and then today's price will come in worse as well. As right now, we're down about 25 basis points, which is worth about a quarter point, is what that translates to in points. All right, so rates have went up a little bit. Stock market's improving, but on the other hand, interest rates crept up a little bit today as a result. All right, folks, you guys have a great weekend. It will be a long weekend, this one, because President's Day will be on Monday, so we won't see you guys until Tuesday. And also, I hope you guys have a wonderful Valentine's Day with your loved ones. Be safe, and thanks for watching. We'll see you guys on Tuesday. Take care.